Hello MoneyWise AI viewers, I'm your global finance educator and it's Wednesday, September 17th, 2025 at 11:09 a.m. plus hours 03. Today we're diving into how to become financially independent. How do you free yourself from working all your life? The answer lies in earning more than you spend. We're stepping into a year where central banks are making moves. And after the Fed's expected 25 basis point rate cut on September 18-19, the stage is set for some shifts. Plus, ESG, environmental, social governance investments are on the rise. But before we ride those waves, let's get the fundamentals right. Think of this as your financial roadmap for 2025, blending local know-how with global trends. And remember, this isn't about individual stock tips. It's about arming you with knowledge. So let's dive into the deep end of financial literacy together. Step 1. Create a budget. Before we chat about global markets, let's start with something simple. Your budget. This might sound basic, but it's the bedrock of financial success. You can't talk diversification or passive income without first mastering your budget. If you're new to the world of personal finance, creating a budget might seem daunting, but trust me, it's simpler than it seems. Let's break it down. Start by tracking your income and expenses for a few months. Understand where your money is going, whether it's rent, food, or subscriptions. Categorize your expenses. Needs are essentials like housing and utilities. Wants are things that are nice to have but not essential, like eating out or streaming services. Then there are savings and investments. Ideally, aim to save and invest at least 20% of your income. Remember, financial independence is a marathon, not a sprint. By understanding where your money flows, you can make informed choices that align with your financial goals. If you want to learn more about budgeting, I've got more resources online. Step 2. Diversification strategy. Now that we've covered the basics, let's talk diversification. As we look ahead to 2025, diversification becomes even more important, especially with global events shaping the economic landscape. Here's why diversification is crucial. Imagine having all your money in one stock. If that company faces challenges, your entire portfolio suffers. But here's where diversification steps in. By spreading your investments across different sectors, industries, and asset classes, you're minimizing risk. When one area experiences ups and downs, others may be more resilient, providing stability to your overall portfolio. Let's illustrate this with real-life examples. The S&P 500 ETF is a popular choice. Step 3. Passive income sources. Passive income is like having your money work for you while you sleep. And in 2025, exploring various passive income sources can be a game changer for financial independence. Here are some avenues to consider. Exchange-traded funds or ETFs are a popular choice. They allow you to invest in a variety of assets with a single purchase. In the US, Vanguard's VTI is an excellent option, offering broad market exposure. In the UK, iShares MSCI World can provide global diversification. And in Canada, BMO ZWC stands out for its global reach. These are just a few examples, but there are plenty more to explore. Next, real estate can be another passive income goldmine. Consider property if you have the resources. However, there are risks involved, so tread carefully. Alternatively, look into REITs. Real estate investment trusts. REITs are companies that own or finance real estate properties. They can provide a steady stream of income. In Australia, the A-REIT is a top performer. In Canada, look into the Canadian REIT Index. And back in the UK, there's the UK REIT Index. Remember, REITs are subject to market conditions, so they're not risk-free. But they can add diversification to your portfolio. Also, don't overlook the power of high-yield savings accounts. These accounts typically offer higher interest rates than traditional savings accounts. They allow you to earn interest on your deposits, helping your money grow without much effort. Currently, Alibank and Marcus by Goldman Sachs lead the pack in the US, offering around 4.2%. In the UK, banks like Monzo and Starling Bank offer competitive rates. In Australia, 86,400, and in Canada, EQ Bank are among the top. Keep in mind these rates can change, so stay informed. Finally, peer-to-peer lending platforms connect borrowers and lenders directly. While this can offer higher returns, it's essential to assess the risks and diversify your investments across platforms. Platforms like Lending Club and Prosper in the US, RateSetter and Funding Circle in the UK, and Rate My Agent in Australia and Canada cater to diverse investor profiles. The key is to spread your investments wisely. Step 4. Emergency fund and insurance. Now let's talk about the safety net of financial independence, your emergency fund and insurance. Life is unpredictable and unexpected expenses can pop up even when you've planned well. Your emergency fund acts as a buffer between you and financial stress in times of crisis. It's your safety net. And to build one, aim to save 3 to 6 months worth of living expenses. In the US, this might mean having $10,000 to $15,000 set aside for one person. In the UK, the National Health Service, NHS, offers a safety net, but additional health insurance is recommended. Australia's private health coverage and Canada's provincial healthcare plans also play a role. But remember, these systems have their own intricacies. Having some cash reserves can help manage unexpected medical costs. Additionally, ensure you have proper insurance coverage. This includes health, disability, and life insurance. Health insurance safeguards you against medical expenses. Disability insurance replaces part of your income if you're unable to work, and life insurance provides financial support to your loved ones if you pass away. It's essential to assess your needs and consult with experts to find the right coverage for you. Step 5. Continuous learning and tracking. Finally, the cornerstone of financial success is continuous learning. In a world where markets are constantly evolving and new trends emerge, staying informed is your secret weapon. As we wrap up our journey today, remember that financial independence is a marathon, not a sprint. It's a lifelong pursuit that requires patience, discipline, and a willingness to learn and adapt. One of the best ways to stay on track is to monitor your progress regularly. Use budgeting apps like Mint or YNAB to track your spending. Set reminders to review your investments quarterly and make adjustments as needed. There's no one-size-fits-all approach to financial success. It's a highly personal journey, influenced by factors like age, risk tolerance, and financial obligations. What works for one person may not work for another. That's why continuous learning and adaptation are key. Whether you're a young professional just starting out or someone nearing retirement, always strive to improve your financial literacy. Stay updated on market trends and economic changes that could impact your investments. 2025. Context. Now let's discuss how these steps are playing out in 2025. The Federal Reserve's decision to cut rates could boost stock values, but it also affects bond yields. Conversely, ESG investments, though initially slower, are seeing renewed interest. Trade conflicts, particularly those involving China, are posing challenges, and oil prices are fluctuating due to global demand and supply dynamics. Amidst these complexities, diversification and a focus on passive income are proving crucial. Conclusion. On this episode of MoneyWise AI, we've explored how to achieve financial independence, emphasizing the importance of budgeting, diversification, passive income, insurance, and ongoing learning. Remember, while the steps are universal, the application is deeply personal. It's about making informed choices that suit your unique circumstances. Thank you for joining us today. If you found this episode insightful, give us a thumbs up and subscribe to our channel for more. Don't forget to stay tuned for weekly updates on Wednesdays at 11:09 a.m. Eastern Time. Until next time, keep learning, keep growing, and remember, your financial future is in your hands.